Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me are Sonia, Shenoy and Anuj Singhal. Well, it's been an even-Steven battle between the Bulls and the Bears for the last at least 48 hours, if not longer. And the Bulls have just kind of prevailed at that 8450 mark. Today there's something going for the Bulls in the sense that the Asian markets have started in the green. It's not just China where things are still very, very wobbly in spite of a good GDP number. But if you looked at the other markets, Taiwan, Australia, even the Nikkei, you can see a dash of green, which gives the reassurance that the markets are at the moment putting the Greece and the Chinese problem behind them. So that might be a sentimental positive for the Bulls today. But there are some negatives. I mean, crude is higher. So it's quite obvious that for now, the best of the Iran news is already factored in. And that, if anything, will chip off a little bit of interest from India. FI numbers have been coming in by, but this could be something which they will take note of as crude prices rise. Incrementally, the Indian story just about becomes that bit less attractive. But most importantly, I think there are a lack of positive domestic cues at this point in time. As the result season gets underway and as the monsoons don't get underway, it's a matter of time before the Bulls have to take cognizance of that, and the Bears will take note of that.
Oh yes, indeed. Lots of positive cues as we head into trade today. Hi Latha, morning. First up, Anuj, morning to you as well. Even for the US markets, it's been a fourth straight day of gains for them. The Dow is now back above that 18,000 mark. The Nasdaq is above 5,100. So at least some of these psychological levels have been scaled. Also this morning, the China Q2 GDP data has come in stronger than expected at 7%. So at least that's a bit of a relief because, we've been talking so much about how the Chinese economy has been slowing down. To see the GDP come in at that 7% mark, it's a bit of a relief. I'm not sure people will swallow
that. I'm not very sure people will swallow that. Look at the way the Hong Kong and Chinese markets themselves have reacted. Of course, there are a lot of other technical cues, but I'm not sure all those markets are taking in the Chinese data at the moment very positively. There is a big bother about, about Chinese JLR sales, if that is falling. The demand picture in China is still a little worrisome despite these numbers. My sense is that Asian markets may heave a sigh of relief. I'm not very convinced that the Indian markets, they start in the green, but do they continue in the green? I'm a little doubtful whether we have enough domestic news.
No, of course, we have been facing a congestion zone at that 8,500 level. So we will need a huge trigger on the upside. But I'm just saying that compared to, the assumptions that China will slow down to 6 and 6.5%, at least the 7% mark that they've reported is better than what most economists were expecting for sure. But Anuj, what about your own expectation as far as the market is concerned? We have been facing congestion at this 8,500 level. You think there's any reason for the market to take that out?
Morning Sonia, morning Latha. Like I said yesterday, a market which is refusing to go down ultimately may want to go up. So that's the sense you get because this market has been resilient to bad news. Today morning, of course, the bad news is the surge in crude prices again from the lows, and I think this really will be the test for the market if the market rises today in face of that. So that's an important point. But I think the Bulls still have an upper hand. The mid caps are doing so well. Yesterday, the Nifty Junior actually closed at new all-time high. Not too many people would have noticed that, but yesterday's closing on Nifty Junior was a new all-time high. The previous all-time closing high was 20,503. Intraday high was 20,611. But in long-term perspective, intraday highs don't mean much. It's the closing high. And in that sense, for the Nifty Junior to be at all-time high, for CNX mid-cap index to be within 2% of a new all-time high is telling you one thing, that the best way, and I dare say the only way to play this market is to identify your 5 or 6 stocks which have been doing well. They keep correcting, they keep giving you an opportunity and to buy them. Our market was a top-down market last year. Our market is a rank bottom-up market this year. At index level, you won't get to show much, but really, if you are in individual stocks, there's so many index stocks, there are so many Nifty Junior stocks which are up 30, 40, 50%, and we're talking about 10,000, 20,000 crore market cap stocks. So make no mistake, it's a bull market in which the index will test your patience. It will keep testing your patience. It will keep testing your stock picking skills. It will keep testing your ability to pick up stocks based on cyclicals, based on technicals, based on a lot of other factors. FI net buying yesterday was very marginal, about 270 crore, and that too was on low volumes. But I was looking at the F&O data, and I would explain it in as simple terms as I can. And essentially, what happened yesterday was that you saw 900 crores of index futures buying, which was long positions. Fresh long positions were created because if you see the derivatives internals, there was fresh long build-up in Nifty futures from index futures from FIIs. The other important parameter was what happened with index options. There was 900 crores of index options buying, and that happened because of two reasons. One, the call writing that took place earlier, that was covered. So at 8400, the calls were written, that was covered. Why would you do that? You would do that if you believe that there's a chance that the market may have a 200, 300 point breakout, and in that case, you might face unlimited losses on some of these calls. So you unwind some of these. At the same time, there was buying in index put options. So call writing was covered, but you bought puts. Why do you buy puts? You want to hedge and with limited losses.
Was it at 8,500?
8,400 put. So if you buy 8,400 put, what's your maximum loss? The premium that you pay. If you sell call, what's your maximum risk? It's unlimited if the market goes up. So essentially what happened yesterday was long build up in individual companies in the cash market, long build up in index futures, and some hedging via index puts while index call positions were unwound. I won't be surprised if this market has one more leg or one more go at that 8,500 to 8,550. It can slip again from that point, and then again we keep talking about the risk reward, whether it's favorable for you. But you do get a sense that one more move maybe towards 8,500, 8,550 is left for this market, even if if it slips later on, as Latha pointed out, because of monsoon or because of earnings when they catch up. So that's something that will be my prognosis. But just to repeat, individual stocks is the way to play this market.
Indeed it is. In fact, even in trade yesterday during closing bell, we were looking at how so many of these large cap names like Coal India, all the oil marketing companies are hitting fresh 52-week highs. Even, stocks in the broader markets, the likes of Dabur, Glenmark Pharma. So there is plenty of buying action that you're seeing.
Yes, in fact, if you see year to date for the Nifty, year to date Nifty is absolutely flat, Sonia, but there are 25 Nifty stocks which have given you more than 10% returns. There are 10 Nifty stocks which have given you more than 15-20% returns. So Nifty stocks, Nifty Junior, there are far too many.
Actually, you can take Credit Suisse's report. They have, you may be shifting from overweight to underweight at the macro level, but look at the strong buy that has come on Maruti. Oh, yeah. So, whatever you may say at the Nifty level, there are still individual opportunities for sure.
All right, and we will be discussing all of these individual